Hey everyone, so welcome back to the channel. It's time for another weekly recap. This recap is going to include a little bit more stock news, and also we're going to be talking about what to watch out for this week. So starting right off the bat, let's talk about Nvidia and that they have dropped the ball. Earnings are not coming up for another 2 weeks, but company have dropped the preliminary numbers already and it's not looking good. On the gaming side, the gaming revenue is at $2.04 billion, which is a 33% drop from last year. Now, the drop here looks especially worse for Nvidia because they have grouped crypto mining demands with gaming together since last year when they were reporting their sales. So when crypto crashes, there was a sudden decline on that side, which, because they lump everything together, now it looks like the gaming revenue have significantly shrinked. This is mirrored by other brands like Logitech, who is dropped 12% in the gaming sector as well. The only anomaly here is AMD, which saw a 32% rise year on year. Now, the CEO Lisa Su, who we call Mama Su, wins this round against Nvidia and other brands. Nevertheless, I do still feel like Nvidia is an extremely strong company. They have very strong foundation and their Omniverse is also doing great things here. Hopefully they can pick it back up and we'll have to see moving forward. Now moving on, next, another stock that really caught people's eyes are a company called AMTD or HKD. So AMTD digital stock suddenly surged over 20,000%. So yep, you heard it right, 20,000% surge within the month. Now, this is a Hong Kong-based fintech firm. It is a subsidiary to a parent company, AMTD Group. After the surge, this puts this specific small company's market cap at $310 billion, making it 14th largest company in the world and have them larger than Bank of Canada, Coca-Cola, etc. Now, online media, if you look online about this, they're going to attribute this surge to Reddit, which is an online forum. It's very popular in North America. And they're saying this is similar to a GameStop frenzy that we saw a year ago. However, I can tell you that for sure it's not Reddit. I do monitor Reddit quite a bit, especially when it comes to these kind of news. Most posts I saw on there were about the surge after it had happened, not before. So for whatever reason, the stock was being pumped very hard by someone or some organization. Now, of course, seeing such surge, many people jumped in after it gone up. And there is a rug pull, which means that the pumpers offloaded at the peak. The stock is down 64% from peak to now. Hopefully no one bought this due to FOMO. Remember guys, you have to buy low, sell high, not the other way around. But speaking of Reddit plays, we do actually have one going on, and that's Bed Bath & Beyond. Yep, you heard it right. The latest well-known struggling retail giant that sells bathroom and kitchen items are Reddit's latest play. So what happened was last week it was discovered that Bed Bath & Beyond had 101% float, which means share not held by insiders, shorted, which means that some shares have been shorted twice. That's how you can go over 100%. Now for those that do not know what short selling is, I've made a video on this last year when GameStop went through very similar things. Essentially, it's trader borrowing shares to sell it to somebody. So they're selling shares that they don't technically own, they just borrowed it, hoping that later on they can buy it back to pay back the people that they borrowed the shares from at a much lower cost. This can generate a massive amount of profit if you anticipate share price to drop significantly, or the company may even go bankrupt, so then you can pretty much buy back the share with pennies on the dollar. However, if the opposite were to happen, if share price were to go up instead, then you could face unlimited loss because whatever the price it is, you would have to pay that price in order to buy those shares and pay it back. So the fact that it is 101% shorted, meaning there wouldn't have been enough share to satisfy the buyback anyway. Now, major investors like Ryan Cohen jumped into this opportunity, so did a lot of retail investor, which, if they follow Ryan on the GameStop play, they actually made a lot of money off of it. So this time they jump into it again. And they're all buying more and more shares. They're all holding it, not selling it. So as there are less and less shares available for you to buy, these short sellers will be forced to offer a higher and higher price to fulfill their position. Now, this is called a short squeeze. This is less about the company itself because while I do love shopping at Bed Bath & Beyond, it is a terrible company from a financial standpoint. Revenue-wise, last quarter they have dropped 25%, but it doesn't really matter when it comes to a short squeeze. It's about simple math. There is just so many shares out there, and if everybody jumps in and buy all the remaining shares, short sellers just don't have enough left, and they are forced to offer a ridiculously high price to close out their position. Now, similar to GameStop, be aware if you are jumping in now. Keep in mind that the stock over the last 5 days has jumped up 100% and more already. Yes, we do expect the price to continue to jump likely, and also there is probably more money to be made. But do be very, very careful. If you look at GameStop, for example, it was squeezed to the peak and then it dropped 50% immediately. Now, there are other, gimmicky things like transactions being halted. That's why this kind of drop happened for GameStop. But nevertheless, be careful. Play with money you're willing to lose. Now, other than stock news, we also have important figure coming out from US, and that's the labor market, and it is very, very strong. Last week, US job reported 528,000 new openings for July. Unemployment dips to 3.5%, which is as low as pre-pandemic. Gains were widespread. Bars and restaurants were getting 74,000 jobs. Factory added 30K. Retail added 22K. Construction added as well despite home building slowed down. Now, another separate report shows that all those previous unfilled job openings have dropped slightly while unemployment claim inched up, but still there's no sign of widespread layoffs. Now, this is actually not a good signal for the market because this can hint to the Federal Reserve that they have more room for aggressive rate hikes if inflation is not dying down, which we'll talk about later on. Market fell, of course, after this, but it shortly climbed back up the next day. One last thing I do want to comment here is while it does look like overall job opening have increased in the US, we have to keep in mind that it is mostly part-time job. Full-time position actually decreased. So while the job opening have remained strong overall, the inner workings, the fact that full-time job have decreased and it's part-time job that's increasing, may signal to the Fed that further aggressive rate hikes may not be on the table or may not be suitable. But we will really have to see, and it all hinges on inflation numbers. So let's talk about important number coming out this week. On August 10th, on a Wednesday, I believe, CPI number for US will be coming out. Now, I suspect no matter what this number prints, it's going to move the market in extreme way. If it is printing hotter than expected, you will see a massive drop in the market. But if it's cooler or if it's plateaued, I do see the market to go up quite a bit. Personally, I do believe it will show signs of plateau, given the sharp drop in oil price, and also there is decline in demand side as well, as we can see due to rate hikes. But again, this is going to be very volatile, so be very careful. And if you're investing lump sum right now, I still suggest dollar cost averaging is the best strategy during these times. Other than that, August 11th, Thursday, jobless claim in the US will come out as well. This is another hint at how we're looking in terms of recession, but this number is not as important as CPI. I think the whole market movement this week is going to hinge on what CPI reads. So we'll see by Wednesday. All right, everyone, so that's everything I have for this week's recap. If you have some important news this week you think I should pay attention to or include in my next recap, let me know in the comment down below. And as always, if you like this video, make sure you hit the like button once. If you don't like it, hit the dislike button twice. Finally, make sure you subscribe to the channel, hit the bell button to get all the notifications in the future. Alright, this is Jacky. I hope you found this interesting. I'll see you in the next video. Bye!